Hey traders, what's going on? Jamie Saettele here. It is April 6, 2016. Welcome to the Midweek Strat webinar, and let me know real quickly if you guys can hear me. Just give me some sort of an indication that sound and picture and everything are okay before we get started. All right, Amir says hello. Sophia says okay. So as far as I'm concerned, we are good to go. All right. Let's start with, hold on. Let's start real quick with US dollar with the index. Dollar index actually looks pretty bad. If we just get rid of we'll just go with the simple stuff here, right? All right. Okay, so here's the median line. This is a structure that connects the 2011 low. I think we talked about this last week. The 2013 high and the 2014 low. And what you've got is the median line, which actually was more or less resistance today. Okay, so you can see that high today. I posted a short-term chart earlier showing the 12,000, 11,950 area from the low from March 11th, which was resistance. So you have price action, so to speak, resistance, and you also have, of course, this long-term slope line, which is acting as resistance today. So, again, with the seasonal components of dollar, this could be, you could be headed far lower here in the US dollar. Okay. Remember my thinking is that the next big support is probably not until about here, the 11,700s, right? 11,700, 300s, 11,700s, what have you. You've got a lot of price action stuff over there as far as lows. February 2015, big lows, good support there. Actually, last April, 1 year ago, so maybe we get down there towards the end of this month. And of course, we were there on Fibonacci Day last year, right? June 18th, 618. So that's an area to pay attention to. So just kind of keeping the broad, I think dollar bias, I guess, on the downside at this point against today's high. If the dollar were headed if the dollar were headed higher, you probably would want to see a break back through this level, right? So where it stopped today is, my point is, where it stopped today is a good region to find resistance. Okay, so there's some just quick comments on the dollar. We've been looking at crude a good amount lately, right? And with crude oil, this is the same chart that you saw from last night, and we are coming up on the median line, which is pretty close to 38 bucks. So the rally that we were looking for is materializing. Again, the action's been in crude. Dollar CAD hasn't been doing all that much. We'll look at dollar CAD separately here in a little bit, but dollar CAD itself been awfully quiet compared to crude oil. And as far as I'm concerned, I do still think, again, if I bring over, this is from Sunday's posts, this is a long-term chart of CAD futures, crude oil futures, right? And over time, for the most part, they do track each other's trends. All right. Obviously, there will be months where you don't have, a very solid relationship. But I cringe when I see, kind of folks put out stuff saying like, oh, there's not a relationship anymore between crude and cat. What do you mean, like anymore? Like there's always some sort of relationship. Sometimes it's not very strong, but but saying that there's no longer a relationship, I mean, that's doesn't make much sense. I mean, I do think that dollar CAD made a high, right? And that the Canadian dollar made a big low. Crude, I'm not so sure. And one more move to, trend lows in crude could very well complete the 5-wave decline from the 2015 high. Okay. Remember that some of these charts, the crude charts, you look back and see, that treating this as a flat pattern, right? So what would that mean for where we are right now? What that means is that we've got, 3 waves down, but 3 waves down could be the beginning of a diagonal. In other words, A, B, C, but that's part, that's wave 1 of the diagonal. Okay, what we want to look for then is a 3-wave rally from down here. Okay, and if this indeed is the correct interpretation, in other words, if this is a 4th wave flat, ABC4, okay, that ended up here at the year open, mind you, and again, this is continuous contract, okay, so it's going to look different than US oil, which basically is going to track nearest month. All right, a little different as far as the prices are concerned, and a lot different when you're looking at a short-term chart. But where you're going to be looking for resistance on this is this line, which is former support. Okay, and it was support, and then remember we broke down through it, came back, it was kind of resistance, traded around it, and then that's when we really, shit hit the fan on, on crude again. So point being that the big test, I think, for crude on the next test, you go 618 of this drop, puts you at 39.70. Okay, so it would not be a surprise to see us back, at the high that we had back up here at 39.85, right? From the way that we look at things, that wouldn't be anything more than just a retest, basically, of former support. Okay, and that still gives you what? We're pushing 38 right now. What did we trade up to this morning? 37.80. So, $2 more on the upside. Okay, which is over 5%. Okay, you could get up into this region. So we're up over 5% today. So you could see another move of similar magnitude in the day or two ahead that gets us up into, again, this region before you roll over again, is the way I'm looking at it. Okay. Now look, if we take out the highs up here, you're gonna probably have to change my tune as far as expecting some additional downside in crude oil. Okay. All right. So there's crude, dollar and crude. The reason I started, well, dollar is good to start with the dollar, but the reason I started with crude is it's still driving a lot of, the volatility is in crude, right? I mean, you're still driving, it's still in the driver's seat, okay, as far as, the S&Ps are concerned and everything else, okay? The volatility clarifies, as far as crude's concerned, or any market for that matter. You look at the really volatile market to get a handle on where things might be headed. And crude oil we've been, right on as far as the levels, the tops and the bottoms and everything, looking for declines and supports and everything. And crude's really kind of driving how I'm looking at the S&Ps. So let's look at the S&P real quick. We'll switch gears. Here we got the S&Ps, okay? Generally speaking, I do think the downside is where the move is from here, or I should say from this region. But, if I'm saying that I think that crude oil could get up to its next spot, what I say, like 39.70, call it $40, okay? Then does that mean that, the S&Ps rally through basically the resistance we're looking at, which, I put this chart on Twitter earlier, it's pretty close to where we're getting up here, right? 2062 is basically the line that was old support. So on this market alone, I'm looking for resistance here. If we start going through it, we got minutes coming up for FOMC here, 50 minutes from now. But this is where I'm looking at, resistance in the S&P. Okay, is in a couple points from here. So maybe we'll get a resolution during this webinar. I mean, we're so close to it. And don't forget the bigger picture, right? And that is, remember this is the line. If I go 240 on this, here's the line that goes back to the lows and extending off of basically every important inflection point that's not at a big top or bottom that goes back to May of last year. Okay, and then we extended off the high, and that was pretty much the high. So I think it's a good reason to look against this high up here for downside. And if I pull up real quickly, let's see here if I can find the chart. So many these workspaces here. Let's see. Just give me one moment because I want to pull up a chart which you may have seen before, but it is, in my opinion, I think an important chart to keep in mind. I printed it out and I've got it kind of front and center, if you will, hanging on my wall. Here it is. Okay. So this is the chart. This is an S&P 500 chart. Okay, and we all want to be know where the really big moves are and the big turns, right? Or have an understanding. So let's say here from the 2009 low, 1, 2, 1, 2, 3, the decline that we just had into February is probably just a fourth wave. All right. Implication being that you do get another high, and in fact we could get another high, another drop like this, and then yet another high. This could last for a while. But what I'm getting at is the big behavior change. The big point on this chart for the S&P 500 is the fact you see this. Okay, this basically what you've got here is a channel. Okay, that's a channel. That's it, and the lines up here, which would channel resistance, okay, that level, basically ended up becoming, resistance, which, you kind of dipped into it and became, somewhat support, not all that great. But then guess what happened in last November? We ended up providing resistance again at that level. That was a big behavior change. That tells me that even if we go to a new high, that we're not going to go to the high will be marginal because the resistance line is just above the highs. Okay, so that's why I would think that even a new high is very, very suspect. Now I had mentioned 1960s and 70s and mostly 60s in recent writings, and the big reason being, you can see this is the same stuff that you've got on the chart that I just showed you, but 1960s, you've got lows back there from actually December 2014, and it's also the median line from this entire channel, which guess what? That was support back here in August 2015, and it was resistance here in January of this year. That's now support to watch for. So if we start trading off and, all the people come out on Twitter and they're like, the world's ending and here we go, and yet we're trading at 1965, 1970 over the next month or two, that's probably pretty good support, okay? So I want to just highlight that so you have that, on your radar, okay? All right, so the big markets we looked at, dollar, crude, SPOOs. Let's look at some of the dollar stuff. We'll start with just euro quickly. I really have absolutely no desire, if you will, to really force anything here. I still think that one will ever for that matter, but I still think that you get a pullback at 115. I still think that the trend's higher and that we can get up into 123 or so, maybe even by the end of this month. And that support to buy is still down here on this former resistance line slash 50 line, which you can see here from the fork. And I still think that you want to buy that, and that is basically 112.60s to 112.80s. Okay, I don't know. I thought we would get it today. When I woke up this morning, I get up and I check Europe and make my coffee, and we were trading down here around 1330, and I was like, okay, great. We're going to get a chance to buy 112.60s, 112.80s today. Instead, you got the dollar just kind of get smacked right in the face and erased everything, came back to actually where we traded on NFPs, believe it or not. We came right back to NFP levels in the US dollar index, and here's a 60-minute chart with the US dollar index. Okay, so NFP was right here. See the spike right there? NFP came out, you got the initial reaction lower, if you remember, and then we ripped. Okay, that was last Friday, that was NFPs. Here we have, a little three-wave rally. There's 11,950s tweeted out this morning. We were at resistance, and then we've come off really hard. And guess what? Right back to where we were during NFPs. So, it would have been ideal. Also, you can see this chart. It would have been ideal to get resistance up here in the dollar. That would have gotten us 12.60s, 80s in euro. It hasn't happened or didn't happen, but either way, maybe you get to 115 first and then you come off and then you go higher. Okay, so either way, I think that they're both really good levels. 115 for a pullback, 116 or 112.60s, 80s to buy the dip for the big run. Okay. Unrelated kind of market, if you will, note dollar Swiss, pretty quiet really, just kind of chopping around to the downside, riding this wedge line. I still think that dollar Swiss could be a substantial upside move at some point once dollar weakness, has run its course. The first level I would even think about buying dollar Swiss would be down here near 94. Okay. Until that happens, not really interested in this chart. Pound and Aussie are the ones that I kind of want to concentrate on most, and I'll look at that in just a moment. Kiwi dollar, guess what? We're trading 68.18. We opened the year right here at 68.27. I still like Kiwi's upside potential to at least 70.35 and maybe 71. If you remember, 71, talked about this a little bit last week, as being the next big spot and where you could come off again. Seasonal components for Kiwi are quite bullish, okay? For the most part, you do start to get a turnaround this week. After this week on, 5 and 10-year seasonal studies, the long-term studies, which is, the 30-year study, and the other studies get their secondary tops. The 15-year study gets its top the week of 4/22, which is the next big seasonal turn date for like everything, basically, because that's when you can see the dollar index turns around that week. Okay, third and fourth weeks of April is when the dollar index tends to turn. Euro dollar tends to be bullish into, third, fourth week of April. Okay, pound dollar extremely bullish up into the third, fourth week of April. In fact, April is the most bullish month of the year historically, and I'll get to that here in just a moment. Aussie dollar tends to be the most bullish up into third week of April. Okay, we'll get to Aussie dollar in a minute. We're following the gold analog, as you know. Where are we? What was I talking about? Lost my train of thought. Oh, Kiwi. So Kiwi dollar, I don't really have any interest in trading it at this exact moment. Amir's got a lot of questions today. Amir, I will get to your questions here in just a moment, my friend. I just want to, what I like to do is I like to kind of go through my prepared comments on the markets, and then I'll get into your concerns. Okay, but with Kiwi, it's chopping around no man's land. It would have been nice to have held the level that we got long at, of course, last week, and to take it higher into the mentioned 70, 35, 71 area. Okay. At this point, I don't really have any interest in doing anything. Gut tells me that we might actually just kind of trade in the range for a little bit, trade up into maybe 69 or so, and then trade lower, maybe try to find support near 67, and then maybe you could go higher. Okay. But Kiwi, again, not much of a looker right here. Okay. Dollar yen, I really have no comment on dollar yen other than the following. Dollar yen is right now, you saw the charts from last night, right? So that was like with the divergence and everything, talked about the divergence with gold, the Nikkei, and the S&P. And that was this chart. Okay. So this you can see here, black, this yen futures, gold in gold, S&P in blue, Nikkei in red. Obviously, the Nikkei is the one that's going to fall the most. But what we have here is, again, 240-day high in the Japanese yen. That would be a 240-day low in dollar yen. You know, again, 240 days. Why 240? It's basically a year, right? Trading days, basically 240, days in a trading year, if you will, excluding weekends, right? So the times when you have that yearly high, if you will, a rolling yearly high in Japanese yen, but you have the gold, S&Ps, and the Nikkei, all three of them are actually not at their extreme 240-day trends. In that case, you would have gold at a 240-day high, you would have the Nikkei at a 240-day low, the S&P at a 240-day low. Those instances are in red. Okay, and you can see that the last time we had anything like that was back. I'll kind of try to zoom in here. Was back here in, okay, basically the 2010 to 2011 period, right? This actually was the all-time high in Japanese yen and the low in dollar yen. And, you can see here, even the strings that you can get, these strings of where this lasts for a while, right? But it tends to get real choppy, and you can get pretty abrupt reversals. Okay, in fact, this was actually intervention right here after that was an earthquake, and then there was intervention. Okay, so that was a really big one. As mentioned, the all-time high. This was intervention right here as well, back here in 2011. You did not have intervention up here, but you did kind of roll into a top, and you got real choppy back and forth, kind of a wedge-like deal going on there. There were other instances here going into, this is what, 2008. So this is during the crisis. This is actually the 24th of October, 2008. That was the crash. That was the day of the crash in the financial crisis. That was peak fear, if you will, right there. October 24th, that was the day that most yen crosses made really big lows. Anyway, you get my point, right? So this tells you all this divergence combined with the fact that you got the COT deal going on with Japanese yen. And I've talked about that recently, but Japanese yen. The speculators, basically, you've got an ownership profile, if you will, that is the most extreme it's been since March of 2008. And that was a substantial top in Japanese yen. The only other time we've been this extreme as far as speculators owning yen, in other words, trend followers being short dollar yen. The only other time besides March of 2008, which as you can see was a drastic top in yen and a bottom in dollar yen, the only other time was in January 2004, okay, and February 2004. And that was also a pretty nasty top in yen / bottom in dollar yen. All right. So my point with all of this is that this is a really dangerous market right now. Okay. The divergences, the COT, and I had a question today on Twitter from, I believe it was Jason, who had asked about how to use sentiment. Well, this is one way. All right. This is one way in which I would actually use sentiment to kind of, warn or understand the conditions are in place for something completely crazy to happen. It's not saying that it's going to happen tomorrow. Okay. I'm not saying it's going to happen even in the next week. I'm saying that the conditions are in place for something extremely wild to happen. And if you get caught, short dollar yen at a really bad price, in the midst of an intervention, then you're kind of like, you're gonna be hurting for a while. Okay. So that's really, I really kind of want to stress this as far as the yen's concerned. How do you play this? Look, in spot currency trading, I don't know if there really is a way to play it. You can't really guess that you're going to get in it. Like if I'm saying that you have all this stuff going on here, the COT and the divergences that say you could get intervention, there's not really a way to just buy dollar yen and pray. Okay, I'm not really advocating that. Now, if you trade options, you could do it that way. Okay, you could buy, puts on yen, okay, or dollar yen calls, or what have you. That you could do that. But as far as just trading spot currency, there's not really a way to do it. Because you really you don't even know what your risk is. Okay, and you can't really trade that way. All right, so that's my spiel on yen. Let's move on to the two things that I've been following kind of, I guess, the closest, Aussie dollar and pound dollar. So Aussie dollar, right, been following this gold deal. I'll bring in this is from the other night. Okay, so real quickly, if the post on Sunday didn't make a whole lot of sense, I'll try to make sense of it here. Okay, so over extended periods of time, you obviously, for the most part, you will have a pretty solid relationship as far as the Australian dollar and gold are concerned. Okay. And then there's times when it appears that like they aren't really moving together. It's kind of like crude and dollar CAD, right? Well, it's not that they're not moving together. It's just that one's moving in front of the other one. Okay, it's moving before. And in this case, it seems to be, just this weekend I thought about this. There was a period back in 2014 when this was the case. And it was a case for quite a bit of time. And let me see if I can find the charts real quickly. Oh, I don't think I have them. I'll just have to look at it this way. But it was like this in 2014 for quite a bit of time, where you had gold basically running 4 to 6 weeks ahead of the Australian dollar, and it was pretty crazy. Like you would get you'd look at a gold chart and then you could just move it forward 4 to 6 weeks depending on exactly where you were, and you would see sometimes to the day, sometimes to the hour, you would have the Australian dollar accelerate in a direction or whatever that gold did 6 weeks prior. And, I was thinking about this weekend and I was like, wait a minute. I was like, we had these divergences in place where Aussies continued to go higher, but yet gold's been falling now for close to a month. I was like, oh, wait a minute. Maybe the same thing's going on right now. So sure enough, looked at the charts, noticed that you basically had the Australian dollar low 19 days after the gold low, okay? And then the top on 311, well, 19 days from there is April 7th. That's tomorrow. So the cool thing with TradingView, I guess, is that you can actually just copy the gold chart pattern and move it. In other words, place it on top of where the gold low is to see if indeed there is any sort of, edge there. And sure enough, there has been a really good one, right? And again, sometimes it's been literally to the hour. I mean, this morning it was, it's why I kind of wrote last night, here we go. We're going to be looking at buying gold on early weakness, right? And early weakness came in, and sure enough, gold's accelerated to the upside. So at this point, we're sitting here with, decent trade, and you've got 75-30 stops raised higher. So the implication here is that we're looking higher in gold into the top. And I came into this week thinking that you'd get the Australian dollar top at 77.80, 78, around there. I guess that's still a possibility. I don't think there's anything going on tonight really with news stuff in Australia, is there? What is this? This is Wednesday. No, there's not. No, there's not. Okay. But you do have, again, you got the Fed minutes coming out here in just a moment, about 30 minutes. But as far as the Australian dollar, we've got this huge resistance up here, right? It really does concentrate around 77.80 and up to, 78, 78.10. Okay, so that region, I guess, is where I'd kind of be looking at establishing a short position, ideally. My I guess thinking though is that this, if I didn't have anything else but this, I'd be wanting to go short up here probably, right? Currently long, but would want to be flipping to the short side up here. But with the gold analog, the gold map, if you will, right? Gold from 1217 here, matching the fluctuations in Aussie from 19 days later. The implication is that we actually get a rally into Asia tonight, and then we get some sort of a top. So I guess you could say it doesn't really matter as much about the price as it does the time. The implication being that you want to look for a high in Asia tonight, and maybe it, maybe on a fairly strong rally, right? It feels like it's going to break out and go a lot higher. So selling it up here, if you get this kind of move, it's going to be really difficult psychologically to do unless you have this knowledge. Okay, at least that's kind of how I'm looking at it. So that, I have the target at 76.50. I guess if you wanted to try to aim for, 77, 80, 78, I guess you could. 78, sorry, I can't think right now. 76.50 is the month open. Okay. The close of the first quarter, 76.57, it's going to be the same as the month open for April, the second quarter. So that's a big price up there. And, even if this is to break, this, the relationship is going to break, I have a feeling that it breaks a little later on down the road. So 76.50 is a big spot. I mean, you could take off half at that point and maybe look to take the rest up. We'll see. But 76.50, month open, all that stuff, big level. Another thing that, you want to look at, I think, is another reason to suspect that you're getting into this important point in Australian dollars is the whole cycle thing that I've written about recently, right? So the cycle is Okay, so 392 weeks from the exact weekly low in 1993 gives you the all-time low in 2001. Okay, 392 weeks after that gets you the week of October 24th. Okay, which was the crash week, I should tell you, not October 24th, but October 6th. Sorry, October 24th was the low week. But right here, okay, that was the financial crisis after Lehman. Okay, Lehman's here. Next week was the crash. So that was that week. 392 weeks from there gets you next week. Okay, and that is important because it tells you that something crazy could basically end up happening next week. Since this is the kind of cycle that typically, Gary, what's up? Asking about the abomination, kind of. And I'll make some comments real quickly on it for you. Let me finish this real quick on the Aussie though. So this is the type of cycle that influences at lows or really bearish behavior, like the crash in 2008. So if there's going to be another crash in Aussie, be a pretty good place for it, wouldn't it? Like up here, like a lot of people maybe say, a lot of cycle analysts would look for what's called inversion, where it's such a big cycle relationship and you get the high on the next move, okay, instead of the low. That could happen, but there's also a possibility that you actually trade into a high, like our analog says tonight, or the 4-7, April 7th, and tonight's 4-7, right, in Asia. So 4-7, April 7th, and then you basically crash into next week. That's certainly a possibility. All right, sounds crazy, but it's a possibility. So I'm kind of saying just be on the lookout for some absolutely nutty stuff in Aussie and yen, for that matter, over the next couple of days, or week and a half. Gary, I talked about with yen. I didn't really look at any price chart. I just kind of reiterated the fact that I had, kind of reservations about, being, any sort of, it's a dangerous market right now, is I guess what I'm trying to get at with dollar yen, because I mentioned the divergence. I went through the COT stuff with yen, and the only time that we've had this, what I call ownership profile, where you've had speculators this long, commercials this short on Japanese yen, which again, flip it around for dollar yen, it can get confusing sometimes. But the only time you've had this ownership profile is in March of 2008, which was a major dollar yen low. Okay, and then also in January and February of 2004, which also led to a pretty big drop in yen / rally in dollar yen. And it's very difficult for a spot trader to trade this, because what are you going to do? Go long dollar yen and hope that that you don't get stopped out at some point? I mean, you can't really do that. It's not much of a strategy, because it could end in a spike type of move too, right? So the only way to do it is really through options, in my opinion. Although if we start to get some, you start to get some positive price action over the next day, then maybe there is a way to play it. We'll see. But yeah, I'm just saying this is a super dangerous market right now. Consider this. Consider what I said in the chart last night with the divergence with Nikkei and gold and all that stuff. Okay. Finally, we'll look at dollar CAD, and then I'll get to pound, because that's the really interesting one that's going on right now. Dollar CAD, same chart from last night. Again, with crude, this is, I guess, your first area for possible support. I'm not interested in buying dollar CAD just yet, as far as a broader swing is concerned, primarily because of my comments earlier on crude oil and the fact that I still think you could get $40 or so. 39.72 would be the 61.8 of the decline. You could still get a move higher into resistance in crude oil before you got the really good buying opportunity in dollar CAD. It doesn't mean the dollar CAD can't go higher right now. It can. This is the median line from the structure that is extended from this high here, February 11th and 24th, and those dates should sound familiar to you because they were both stock market bottoms. Okay, This was a stock market high. This was a stock market high. Okay, so, or sorry, stock market low, stock market low, stock market low, excuse me. So we might end up getting a move into this region up here, 32.95 from this area, because this is support. If we get up there, then you'd have the opportunity, in my opinion, to buy the next dip, which is when crude gets down to, or gets up to close to $40 again. So you'd also have an inverse head and shoulders that would be taking shape. Bottom line is, I think that the next number of days, maybe even a week, but probably 3 to 4 days, actually ends up as kind of making a base over here before dollar CAD can go higher again. And I do think it will. I think that you get up, back towards 138 or so, which is the year open price and the December low. You do have 5 waves down in crude oil, or sorry, in dollar CAD at this point. And again, you do have the extremely long-term support region, which is right here. Right? So you do have the really long-term support. Okay, let's look at pound real quickly. And then it might not be quickly, it might take a while. There's a lot to say. And then we'll look at some other things. Okay, pound dollar. So the seasonal components, I did go through this a little bit earlier, but pound dollar. This is the most bullish period of the year for pound. And this is where I'll start to answer Amir's questions. Amir said earlier, he says, Amir, nice to have you here. He goes, how do you justify pound weakness despite the bullish seasonality? There is no justification that needs to be done. Okay. The market's going to do what it's going to do. And, there's no need to justify the move. Okay. The grand scheme of things, we could still end up trading up to 150 by the end of this month. And, you would look back and say, man, the seasonals worked really well. Okay. But the chart pattern on this thing is kind of twofold. You've got, from a price action perspective, you do have this really long-term support. Okay. And remember, the support that I'm talking about, parallel, okay? I'll get rid of these lines. So you do have support. You do have support from a downtrending action line here as well. Okay. That in essence is a channel, kind of an internal channel, if you will. So it would not be all that crazy to suspect that you could get the next high on these lines here. And by the way, the purple bar is every April. So last April, we had a giant up month and it was from a low. You can see that the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 Aprils have been higher. So maybe we're due for a down April, I don't know. But I don't really look at seasonality like that. The way I'm looking at it is that you've got, significant positive seasonality. Okay. So, go back even further. Let's go since 2001. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 up months to 1 down month. So the last 15 years, 14 to 1. You can go back further. You did have a down year in 2000. I'd call them flat basically here in 98 and 99. You did have 3 down years in a row in 95, 6, and 7. Up months in 94, 93. Up month in 92. Down month in 91. Okay, point being is that there's an overwhelming positive bias in April for the British pound. And this is happening while we're at this support line, which is really long term. It's also happening when you'd have a pretty, as of recent, not as significant now, but recently you do have a pretty substantial, bearish sentiment reading on as per the COT figures. And just so to give you an idea, again, this is my COT index, if you will, and you can see that the week basically after the low, you had sentiment, if you will, if you measure it from this angle, from the speculators and the commercials, you had basically speculators being the most short pounds and commercials being most long pounds, going back to 3 years, and that was down here before you got a really big rally. Now I don't think that's going to happen this time. I actually think any sort of rally will be short-lived. I think you could get to 150. Eventually, I do think that pound dollar ends up potentially going all the way back down towards these lows, which is near 105. Okay, but my trading focus at this point, I think it has to be on the long side with all the information I just presented, the long-term support being probably the most important. Seasonality doesn't hurt. And then looking on the upside. But what about the near-term picture? Okay, let's go there. Near-term picture. Okay, here's the daily. Okay, we haven't held any sort of support. Okay, pound is going to make it virtually impossible to be on the turn. What I'm thinking is that if we end up finishing the day like this, okay, you've got another huge wick down here, and that might actually be the one that we want to end up putting maybe an order in to buy for tomorrow. Okay. I was looking at 140, 150. That didn't hold. 140.78. I mean, it didn't really hold that either. We went all the way down to 140, close to 140, and then we've, here we have come back basically to unchanged on the day. Again, you got Fed minutes here in 13 minutes, so we'll see what happens. There is, and I don't like doing this because I feel like when you do this type of stuff, you end up kind of like forcing it, or like seeing what you want to see, I guess is what I'm trying to say, if that makes sense. But, and what I mean is you'll see what I'm talking about here in a second. But what you've got here are like two patterns. So you've got a head and shoulders pattern, which hasn't, triggered yet, but this could be, all of this could be a right shoulder. Okay. You do have the breakdown today, which was basically a head and shoulders breakdown, with this being the shoulder, head, shoulder. But you know what? This one actually would be your long trigger because this is a failed pattern. I have no intention of buying this right now. I want to wait until the day ends because I don't know what the hell is going to happen with the minutes coming up here. But broadly speaking, all the information I presented to you about seasonals, long-term support, I think that this would be the right way to look at this pattern. Okay, to say that you've got a huge head and shoulders pattern that's been going on since January. You've got a head and shoulders breakdown fake out on a shorter term pattern, and that basically might catch a lot of people selling this breakdown here, which is going to fuel this thing up to 150. That's kind of how I'm looking at it. So I guess Amir also earlier asked about pound yen. I guess you could say that that would be a bullish pound yen scenario. Again, yen, I don't, you could trade pound yen through this, but at this point, I'd rather not screw around with anything yen. CAD yen is a trade, an order I have in. That's fine. It's extremely well defined. It's one of the best looking charts I've seen in a long time. Talked about that the last two webinars here, midweek webinars, but that's come off hard. So CAD yen might be one to look at. especially if you end up getting some chop to the downside and dollar yen finishing off maybe some sort of a diagonal or whatever. Either way, chart to chart, and the CAD yen levels are clean. Okay. If I'm going to trade pound dollar, I'm going to trade this. Pound anything, I'll probably trade this. I think that you are getting into levels in some of these pound crosses that could be really interesting. Pound Aussie on the upside could be really interesting. Pound CAD on the upside could be really interesting. Pound dollar could be obviously super interesting as it is kind of right now. It's interesting. But let me do what I was going to do before. Okay, so here you have this, which I put this out on Twitter earlier. You've got resistance, okay, which we came off of really short term, but it is an interesting little reaction. So if you get back through this, maybe this line ends up becoming support again. But this is what we were looking at before, right? Low, high, low. Hasn't really held. I mean, on a daily basis, I guess you could say it held. But what I was going to do, and I say that I don't like doing this all that often. But you see, if you shift it over here to this low, I think you actually get a better slope. Okay, not just because you just caught this low, but look where the resistance is up here. So this might be the area to look at, or the slope to follow. And it's a little shallower, okay? And Amir here asking about pound yen. He's already long in losing. Yeah, I mean, I don't, Amir, I don't know. I never, if you took the trade, if you went long pound yen, I'm not sure what to tell you. That's your trade, my friend. Own it, So yeah, I mean, pound yen, I was looking for lows for the last probably 3 weeks. Didn't really get a low, obviously. So there was no long trade issued. It could be a trade that works out for you, but the first thing that you need to think about, Amir, is where's your trade, where's your stop? Okay, what's your risk? Define your risk and everything else will take care of itself. Okay. There's no reason to just, put in a trade and hope that it works out, right? You want to kind of have a little more of a defined strategy, I think, than that. So if you're long pound yen from 158.20, as you say, where would your stop be? Right? Is it down here? Is it below the lows? If it is, you'd be pretty close to getting stopped out here. Okay. That's pound. So again, we'll see what the minutes do out in 7 or so minutes, but it could be a pretty solid opportunity to buy pound dollar over the next day or so, right? So what you're triggering here is a failed breakdown, a hold of support on short term, long term, and getting back up through here. 42.20 would be your area for resistance potentially, because it's the week open. If you get through there, it might actually be support. But yeah, so potentially things are lining up for a big move in pound. I reserve the right to change my mind at any time, as any trader should do. But this is what I would be following at this point. Dollar Mexican peso. Gary. I think we looked at this a few weeks ago. This was the chart we came up with, was it not? This was the chart we came up with on a weekly basis, and we were looking at support basically being more or less here. I think we looked at it right here. So we came below it last week and have turned up this week. This might be something to follow short term. It's a 60-minute chart look like. Getting a little impulse on the upside. 1, 2, 3, 4, 5. Watch for a pullback in 3 waves. But more than that, watch for support. At the fib levels. So maybe 1738 and change. To me, this is the good looking chart. This is the weekly dollar Mexican peso. Okay, you've come off of, kind of scary blowout type of resistance, and resistance might be back up here, okay, near 18.7, 18.7, 18.8. And eventually support's probably down here. But, as far as trading is concerned near term, I think you have to look higher while you're above the low from last week. Okay. So, I mean, you've, more or less held a pretty well-defined long-term support region, and I'd be looking higher from that region. Okay, so that's pretty much it for me. I want to stress, the importance of Aussie kind of over the next day or so, right? Getting into, with the gold map, if you will, the gold analog, whatever you want to call it, it's suggesting it's been spot on here for this whole week. And, I would kind of be, looking at the potential for a top to form during Thursday's trading day. And if we continue to follow as closely as we have, then it would be into the Asian session. So really not that far away, right? Could be in 8 or 9 hours. All right. So that's what I'm looking at with Aussie. Target 76.50. Other than that, following this dollar CAD thing, want to get long dollar CAD, just not sure if it's sooner or later. Pound dollar, similar story. Depends what happens the rest of the day. If we end up on these minutes puking off again and coming back lower, then pound dollar might just be totally screwed. But all the info on, what we're talking about as far as the seasonals and the potential fake out on the downside on this short-term pattern, the support long-term, short-term, I think paints a pretty good bullish constructive picture, at least a possibility for us to head back to the upside. So we'll see. All right. Okay, so I'm wrapping it up here. Thank you all very much for attending. Get this archived and sent out, and have a good one. All right, bye.